Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be talking about the total indicator risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. We do have several different tiers available, including a free one. Make sure you check it out. Link is in the description below or the pinned comment. In this video, we're going to be providing a seasonal update to the total indicator risk, which is something that you'll probably have seen me cover on this channel a number of times throughout the years. Now, I do want to mention a couple of things. I will be addressing some common misconceptions in this video and talking about various strategies. At no point am I providing financial advice in any way. I want to be clear about that, but I just simply want to sort of address various questions that I've seen in the comment section and just try to be as transparent as I can be, okay? If you're looking at this chart, it probably looks somewhat familiar, and it's because we've talked about the risk levels and the risk metric on my channel for a long time. Now, the constituent parts of the risk metric have actually changed over time. If you go back and look at some of my videos from, say, 2019 and 2020, when we talked about the risk metric, it was actually slightly different back then. But the premise remains the same, and that is the general idea to scale into the market at low risk levels and to scale out of the market at high risk levels. There is often a common misconception that I see, especially sort of on the public side, and that is that if I'm talking about the downside risk, then a lot of people assume that that means I don't have a position in Bitcoin. But it's actually simply not true. And I've been clear through the years that the way to navigate the Cryptoverse is not to pretend like we know exactly where the top or the bottom is, but to have a strategy and to carry it out over a multi-year time frame. That's all we can really do. I don't think anyone's going to give you the answers you're looking for in terms of identically timing the top or the bottom. It always becomes obvious, of course, in hindsight, but at the time, it's really hard to call the top on the day or the bottom on the day in any consistent manner. At least I don't claim to be able to do that, and I want to be clear about that. So one of the things that I want to talk about is there are differences, of course, between this risk metric and the one we had on the channel back in 2019 and 2020. This risk metric right now that I'm showing, we've actually shown a number of times on the channel, so I don't think this is the first time, but I just want to be clear that it is not the same one that we talked about back in 2019. Back in 2019, it only included, price and volatility, right? We only looked at price and volatility to determine what the risk metric was. This one takes into account price risk, on-chain risk, and social risk. So it takes into account three different things. To be clear about every part of this risk metric, it includes the Bitcoin risk, which was this risk metric over here that we talked about in 2019. It has not been changed. It includes that risk metric, which, by the way, when you look at it, it actually did go above the 0.9 in the 0.9 to 1 risk band back when Bitcoin went to, that 50 to that 60K level. It actually made it up to about 0.94 risk, which is where I scaled out mostly during the first peak during the last cycle, not the second peak, the first peak. That's when it went to the high risk level. So this risk metric includes that one. It also includes the total market cap risk. It also includes logarithmic regression, the logarithmic regression for the market as a whole as well. That's from the Bitcoin Beauty of Mathematics series videos. The corridor that I use, which is sort of a function of some various price-based metrics, the fear and greed index, the MVRV Z-score, the Peel multiple, the MVRV score, the minor cap to thermocap ratio, the market cap to thermocap ratio, transaction fees, the terminal price, and then also some social risk metrics like followers to exchanges on Twitter, layer ones on Twitter, and analysts on Twitter, and then YouTube views and and new YouTube subscribers to popular cryptocurrency YouTube channels. So it accounts for all of these things. So it takes into account a lot of different metrics. And so the reason for doing so, and this kind of goes back to one of the video series that we also do, which I probably should provide a video update soon as well, is the video series where we talk about the bulls versus the bears. And the reason why, it's useful to use more than one indicator is because some indicators will flash well before other ones flash, right? And if you go back to Q3 on this channel, there were a lot of videos that we put out back in June, July, August, September, and October, and even November, where we talked about the dangers of assuming that June was the bottom. And back then, there were no shortage of people calling June the bottom. And they pointed to very specific indicators to say that it was the bottom, including things like the hash ribbons, including things like, oh, well, it's been a year since the all-time high if you ignore the second peak, as well as a number of other indicators, right? Plenty of indicators you could have looked at. I mean, the fear and greed index was at very low levels as well. The problem is that there's always other indicators that you could have used that were a bit more conservative. So rather than cherry pick the indicators that we want to tell the narrative, right, to sort of define what we want to see, why don't we just include, 15 or so different indicators, normalize their behavior between 0 and 1, and then make a risk metric out of them. And when you do that, this is what you get. Okay, so it goes from 0 to 1. In this case, we're making 0 risk be dark blue, and red is 1. So 0 to 1. At low risk, you generally want to scale into the market. At high risk, you generally want to scale out. Again, not financial advice. This is just based on historical data, which is always subject to deviate in the future. So we need to be cognizant of that. I want to remind you before we get too much further, because I find myself constantly saying this not only on my own YouTube channel, but also on the NFA the live streams we do on Thursdays and whatnot. You can talk and understand the downside risk of an asset and still have a position in that asset, right? I know that sounds crazy, right? But that is something that you can do. And that's something that I often do. No matter the price of Bitcoin, whether it's 23K, 20K, 40K, 50K, 10K, I'm always going to be here to talk about the downside risk, right? It's just part of my nature to understand what is the downside risk at any time. I can assure you that in December 2018 and March of 2020, there were not a lot of people prepared for 50 to 60% moves to the downside. It did not stop them from happening. So at any given time, we need to be aware of what the downside risk is. Not to say that it has to happen, but to be prepared in case it does happen, okay? Now, over the course of the last year or so, you've probably heard me say things like the Bitcoin dominance should go higher. Because I still believe that, I have just simply not gained exposure in the altcoin market for over a year now. Okay? Have I missed out on some pretty great rallies in the short term? Yes, I missed out on the January, February, and March rally of 2022. I missed out on the June, July, and August rally of 2022. I missed out on even the current rally, right? But the point is, for me, is that I think the dominance is going to go up. So I would rather put whatever dollars that I'm going to put into the cryptoverse, I'm simply going to put them into Bitcoin. So there's the common misconception that because I talk about the downside risk and because I put out videos like, what is the worst case scenario, that some people might assume that I don't own Bitcoin. Just want to set the record straight. That's not true. I do own some, and I've picked up plenty of Bitcoin. Right, plenty of it over the years, and I still have picked some up in 2022 as well, and this year. Okay, now, why then do we talk about the downside risk? Why would I pick up Bitcoin if I think there's a real risk that it could go lower? Well, that's a good question. The reason is because number of things. First of all, just because it goes lower doesn't mean that I'm going to have the ability to capitalize on it. You think back to March of 2020. A lot of people waiting for sub $4,000 were granted their wish for like 5 minutes. What happens if you were sleeping? What happens if you didn't have limit orders set, right? A lot of things can happen. Just because you think it's going to go somewhere, it doesn't mean it's ever going to go there. And if it does, it doesn't mean you're going to be able to capitalize on it, which is why in this video, we spent a lot of time in 2019 and 2020 and 2021 talking about dynamic DCA. Okay, the whole idea is scaling into the cryptoverse when the market is undervalued and scaling out of the cryptoverse when the market is overvalued. So when the risk is between 0.4 to 0.5, this is going back to the last cycle, I would DCA a little bit. When it was between 0.3 to 0.4, I would double my DCA, which is dollar cost average. When it was between 0.2 to 0.3, I would triple it. When it was between 0.1 and 0.2, quadruple it. And when it was between 0 to 0.1, it would be 5 times. Unfortunately, we never went to the 0 to 0.1 risk span in the last cycle. in the bear market. We never went there. So I was never able to do the 5x DCA, right? Like I still always had some cash that I had not put into the market because I was waiting on this nebulous thing that never actually occurred. It doesn't mean I did not have a position, and the cash that I did not put into Bitcoin just ended up going into other things like Ethereum and the altcoin market. Okay, there was still plenty of money to be made as long as you had cash to deploy in the bull market, right? In the same way, it's useful to scale out, in my opinion, when things are overvalued. But they can stay overvalued for a long time. Now, again, we made it to the highest risk band over here, the 0.9 to 1 risk band, at the first peak in the last bull market. So going back to the total indicator risk, we're currently sitting at 0.202. And what I'm going to do is we're going to look at the raw values rather than look at the color-coded version. Okay. Right now, the lowest this risk level has gone this cycle is 0.117. If you remember back to Q3, we put out a video on this and we talked about the bulls versus the bears, and the risk level, went down to like 0.148 or so, maybe a little bit lower, 0.135 near the bottom. And of course, back then we said, hey, this is a pretty low risk level, all things considered. If you buy at 19, 20K back in July, in a few years, you're probably not going to care. In a few months, who knows, right? Who knows? And a few months later, we talked about how typically the Q3 rally is a fake rally, a bear market rally, and we go put a new low in Q4. And we did. So yes, it was a low risk level. It did not stop us from going lower later on. It did not stop us from going lower. Okay? So we need to be aware of that. We ended up going lower in Q4. And again, right now, the current risk is 0.202. So the whole idea is to scale into the market slowly but surely when we're undervalued, and to scale out when we're overvalued. If you go back to this chart, it's the same thing we always say in the Bitcoin Beauty of Mathematics series, right? When we're below the fair value logarithmic regression trend line, the idea is to slowly scale into the market. And when it's overvalued, the idea is to slowly scale out of the market. That's the whole idea with how I approach the market. I spend a lot of time thinking about the downside risk, mainly because I've been burned so many times in crypto, and I want people to be aware that there's downside risk is always going to be there, no matter how sure we think we are about where the price is going. So I make no apologies for it, and I will continue to remind people that despite us talking about the downside risk and despite us talking about worst case scenarios, it does not change my long-term view on Bitcoin. I do think it's going to eventually head much higher, and it does not change the fact that I have a position in Bitcoin, even if you think I don't. Okay, so please be aware that understanding the downside risk of an asset does not equate to whether I own that asset or not. In fact, if I own the asset, I'm probably more likely to try to understand what is the downside risk, because I'm either wanting to potentially pick up more or trying to figure out if I should skim some off if the asset is really overheated in terms of its risk level. Right now, even at 23K, the risk on Bitcoin is still relatively low in the grand scheme of things. So it still could go much higher, and there still is plenty of room for it to come down. It all depends on how things play out here over the next year if we actually get this sweet spot down here at these relatively lower risk levels. Now, from a cyclical point of view, Bitcoin normally bottoms around November, December, January. So there is at least an argument to be made that November could be the bottom, right? I mean, this is something that you have to just accept, right? June could have been the bottom. I said, I was very clear about it. I was like, I don't think it's the bottom, but it could be. November could be the bottom, right? Just like June could have been the bottom, November could be. And I would say there's a little bit more weight into considering it now than there was back in June, okay? Because from a cyclical point of view, it seems like the bear market has run its course. The main risks I think we have are regulation risk and recession risk. Regulation risk, I don't really think it's going to hit Bitcoin as hard as it might hit the altcoin market. Recession risk is a real thing, but we still might not be in a recession for a long time. Could be 6 months, could be 12 months, could be longer, right? I don't know. The job market still remains relatively strong, and the Fed is likely going to keep raising interest rates to make sure that inflation doesn't go away, which could provide, some headwinds to risk assets. But in general, until either inflation goes back up or the economy starts to slow down in a material way, risk assets could continue to show strength. So I would still look at this risk metric and say, you know what? In the grand scheme of things, it's a low risk level. So for me, in the grand scheme of things, it makes sense to have a position, okay? And I've had a position for a long time. I mean, I had a position for all of 2022. I didn't sell all of my Bitcoin in 2021, and I still picked up Bitcoin in 2022. I think there's always a disconnect too between the public side and the Into the Cryptoverse Premium, because on Into the Cryptoverse Premium, I'm pretty open about where my what I'm doing and that sort of stuff. And for instance, during the June capitulation, I was very open that I thought we were going to go lower eventually, but I still picked some up back in June. I had a limit order filled at around 17.6. Still pretty open about that. I was like, look, I think we're going to go lower, but I still had a limit order filled. The reason is because I have to admit to myself one thing, and that's I don't know exactly which way the market's going to go. Even though I thought June was not the bottom, was I willing to bet having no Bitcoin on it? No, I wasn't, right? And just like today, we could easily see a new low eventually. Am I willing to sit in 100% cash waiting for a new low? No, right? I'm not. Majority of my portfolio is Bitcoin. You might say, well, why don't you get Ethereum? Why don't you get more Ethereum? Why don't you get altcoins? Well, if you look at history, history shows us that the altcoin market still bleeds even after Bitcoin bottoms, okay? Look at a lot of the altcoins from last cycle. They had pretty bad 2019s and 2020s when you look at their year-to-date ROI as a function of time. Many of them put in new lows, and if they didn't put it in 2019, many of them put a new low in 2020 in March of 2020. So I still think the dominance of Bitcoin is poised to go much higher. Therefore, if I think that, why would I put a lot of money in the altcoin market? Because I think my risk-adjusted returns are better in Bitcoin. So again, the way that I choose to navigate the market right now, my crypto portfolio is heavy Bitcoin. I also am heavy cash in case we see another downturn. Note that if Bitcoin were to put in a double bottom, the altcoin market would likely get even more wrecked than it did the first time that Bitcoin went down to 15K. You have to be aware of that. How do you take advantage of potential scenarios that could play out like that? You have to have cash, is my opinion, right? If I don't have cash, I can't take advantage of it. I also think there's this common misconception that you're either 100% deployed into the cryptoverse or you're not, and you're either with us or against us. That's not the way to navigate crypto, in my opinion. That the way to navigate it is to sort of have, especially during sort of like a sideways accumulation year, 1 foot in, 1 foot out. 1 foot in because history shows us, like 2015 and 2019, that you can get some pretty nice rallies, but 1 foot out in case you get another mini bear market that lasts 3 to 6 months, like we saw in 2019, like we saw a couple times in 2015. So I think that you have the primary bear market years of 2014, 2018, and 2022. I think you have the recovery years of 2015, 2019, and 2023. 2015, we saw a new low. 2019, we did not. We have 2 data points. One put in a new low, one didn't. There's a lot of people that are already claiming they know what's going to happen in 2023. We only have 2 data points. And in both cases, one put in a new low, one did not. I'm sort of going into this thinking, hey, we could put in a new low, and if we do, I'm going to be ready for it. And if we don't, then I'll so be it. I'll just continue to DCA later this year and throughout a lot of this year and just be patient, wait till the next halving, and hope we trend up to new all-time highs again. That's how I navigate the market. It's not any more complicated than that. Please do not mistake my videos on managing, or at least discussing the downside risks. Please do not mistake that with my position in Bitcoin or my long-term view on Bitcoin. I think a lot of people are tired of hearing me talking about the downside risk, and they assume that I think just Bitcoin's only ever going to go down. That's not true. I think we will go to much higher prices. I just think that we're in a recovery year, and like I've seen in 2019 and in 2015, people tend to get ahead of themselves. They start talking about new all-time highs, and we typically just come back down eventually and retest the lows at the very least, or get somewhat close to them. Okay, so this is my general outlook on crypto. And again, right now the current indicator risk for Bitcoin, when you incorporate price risk, on-chain risk, and social risk, is 0.202. If you exclude the social risk, it's obviously gone lower. Right? It's gone lower, but it still hasn't gone as low as it did in prior bear markets, right? It still did not go as low as it did in prior bear markets, even when you exclude the social risk. This is the most common form of criticism I've gotten from the social risk, is that, well, if you exclude it, we've already gone down to these levels. And it's true. And that's why I have a position in Bitcoin, right? But even when you exclude the social risk, we still have not gone down to historic lows that we've normally seen. And that's why I have to remain somewhat open-minded about, well, could that happen later on? Like, could it happen? It could. And therefore, if it does, I want to make sure I'm ready for it, even if it doesn't happen, right? Hope for the best, plan for the worst. The other thing that kind of irks me a little bit, if I'm being completely honest, right, and I just want to be an open book, is, in 2015 when we bottomed in January, and in 2018 when we bottomed in December, I don't remember, collectively crypto Twitter, well, not that crypto Twitter really existed, especially in 2015, but it did sort of exist in 2018, and there was also YouTube as well. I just simply don't remember everyone collectively calling the bottom, which is what it feels like is happening this time. It feels like there were some people calling the bottom in June. A lot of people called the bottom in June, but then a larger number of people called the bottom in November. Of course, everyone who called the bottom in June is more or less calling the bottom in November as well, because they are probably, they just don't want it to go much lower. But if everyone's calling the bottom, which it feels like a lot of people are, I do wonder, is it too much? Like, is there too much social interest right now? Because if you were to go break this down and just look at the social risk, like if we break this down to the social risk right now is 0.195. So it's been going lower. Last cycle, the market didn't bottom until the social risk was essentially at 0. So that's one reason I'm a little bit skeptical, and which is why I think it's worthwhile to keep an open mind about will Bitcoin eventually go to a lower price or not. I just don't know. Are there too many people still calling the bottom for it to be the bottom? I don't know. I mean, it's mental gymnastics to some degree, and I tend to stay away from that. So just a final reminder. And I feel like I have to address this just because of all the comments that I see, not only on my YouTube channel, but on Twitter and other places as well. Just because we talk about the downside risk to an asset does not mean that it's not worth owning that asset. It is nothing to say to that. It's just about, we need to understand what it is so that we can better navigate the market. And if there is a chance to buy at lower prices, I would consider that a good thing, not a bad thing, because I ultimately think Bitcoin's going to go much higher. It's just a matter of time. I just view this as, how do I deploy my capital in the most efficient way possible between now and when Bitcoin makes that run to 100K, 200K, and higher. That's what I want to do, and that's how I'll continue to navigate the Cryptoverse. Hopefully this has been helpful in terms of coming up with a strategy. If you don't have access to this, like if you don't have into the Cryptoverse Premium, that's completely fine, right? Like, just figure out something else to go buy. You don't have to use my risk metric. There's other metrics out there that you can use. There's plenty of them. And I've often said many times as well, you don't need some super complicated strategy to be successful in crypto. You just need a constant strategy, stick to it, and wait. And normally good things happen. All right? This bear market has thrown us plenty of curveballs so far. Probably going to throw us some more as well, especially as we get further out into 2023 in the accumulation phase, which arguably we're already in. Doesn't mean we can't retest the lows, put in slightly new lows. You need to be prepared for all these scenarios. I'll continue to follow the risk metric. I will continue to get into the market at low risk levels, and I will scale out of the market at high risk levels. It's not more complicated than that, even though I will continue to talk about both the downside risk and the upside potential of crypto. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.